Connection established.
Hey everyone, hope you're all doing well. In today's video, it's going to be the first video of the Perps Education Content mini-series. I'm going to be going over fair value gaps. Alright, so what is a fair value gap? A fair value gap is a concept, essentially, where candles go through one area of price very quickly and create an inefficiency in price. And what does this inefficiency mean? It means one side of the market was going straight through this price area and the other side wasn't able to get enough orders filled. So it's inefficient, right? And if there's anything we know about the markets, especially on the big coins like NASDAQ, S&P 500, they're not coins, I apologize, the big indexes, and likewise the coins, the crypto coins, Bitcoin, Solana, Ethereum, XRP, all these, they're ran by algos. Whether you want to say yes or no, they are, okay? Whether you want to say they're not, whatever, I don't care. The way the market trades, it most definitely is if you open your eyes and actually study. All right, so when there's an inefficiency in price, it creates a gap. And how do you identify these gaps? Well, they're kind of obvious on this screen, are they not? So let's start right here. So these gaps are formed on any singular time frame, and it's where you have one candle here where you select the high, and then look at this big candle comes through, offers no wicks really, right? As you can see, no wicks really were offered. And look, this next candle came in, made a low, made a high, and closed. So where's the gap? I'm sure you guys can tell, but right here, you click this high, you click this low, and there's your gap, right? And that was an inefficiency in price. That was a big inefficiency in price, and only really bullish order flow was offered here. As you guys can see, it was only pretty much straight up on the 30-minute. Yes, this is the 30-minute. We'll zoom back into it, right? But look, now we go into the 15-minute in the same rectangle. As you can see, you can redefine it a little bit, refine it a little bit, right? So yes, you have a very tiny fair value gap in here. Can you see it, guys? Right here, right? There's a gap, this high and this low. It's tiny. We really don't care about those tiny ones, guys. On the bigger time frames, 15-minute, 30-minute, 1 hour, 2 hour, 4 hour, weekly, daily, monthly. We don't care about the little ones. We care about the big ones. So as you can see here, this is the big 30-minute one. And guess what? Inside the 30-minute one, we have a 15-minute one, if you guys can see. We have this high, this low right here, and we have this one. So when you're trading, you want to get very, very, very specific with your trades. All right? You want to get very specific with your trades and keep refining until you get the picture perfect entries. So this is another inefficiency offered here, as you guys can see. And what happens? Obviously, we have the big 30-minute. Now we have a 15-minute. We could keep zooming in. They're going to keep getting fair value gaps are going to keep being created. So as you can see here, look, right? We have one right in here. Fair value gap. You guys are catching on? See, look, high, low, we passed through, created a gap, an inefficiency in the market. Likewise, there's one here, right? As you can see. And now you're going to be asking, like, Chris, why did you not buy in this top one? I didn't take this trade, FYI, but Chris, why wouldn't you buy in this top one? Well, where is there more overlap, guys? There's more overlap with 30-minute here, the 15-minute here, and then the 5-minute here, than the 5-minute up here, right? And also, there's another concept called discount and premium, which I'll do actually another video on as well, which means is it in the top portion of the range or the bottom, right? So if we take the range from this low to this high, where's this fair value gap? This range is in the top of the range. This fair value gap is in the top of the range. It's above the 50% mark. You want to be buying below 50% always on any singular high to low swing. So as you can see here, we could only be buying below this 50%. And where's our fair value gap under 50%? It's right in here, right? And guess what? You could keep refining, right? So let's go 3-minute, right? It's going to be just getting more specific and nuanced. So likewise, you have a fair value gap in here now, right? From this high to this low, it's a little bit bigger, right? So let's make it a different color so you guys can see. So you have one right in there, the little one, right? I know it's a lot of rectangles, but I'm just trying to show you guys how this works. And obviously you have them here, 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 here as well. But the same concept applies as I was mentioning. You go, right, you could theoretically do it from here, but if you know anything about liquidity grabs, which we'll actually discuss in future videos, You wouldn't really classify this as a swing because it took out the liquidity here. It was simply a manipulation leg. They were manipulating price to take out all the stops and finally reverse. All right. So you'd kind of consider these swings to be the first legit swing above this liquidity. And so you'd see fair value up here, fair value up here, fair value up here. But likewise, the same concept of discount and premium, which I'll go over in videos soon. So you wouldn't be buying up here simply because it's above the 50%, right? When you want to buy, you want to buy in a discount. When you want to short in a premium. So the top is a premium, the bottom is a discount. The bottom 50% is a discount, the top is a 50% premium, right? Above 50% is a premium. So you'd only be looking at these two fair value gaps, all right? And then guess what? You could even refine even more. You could go to the 1 minute, right? On the 1 minute, you get a little bit more cluttered, but I know what to look for, so this would be an obvious trade. Chris, where would you buy? Right? Well, you have an order block in here, which I'll teach in a future video, but why wouldn't I buy here? Well, because we actually have liquidity here, right? This is liquidity right here. On a very, very minute, small time frame, let me clear up all these rectangles. You actually have stops in this area, right there, okay? Because think about it. Think about what this algorithm on a low time frame was doing. It was up, right? Down, up, 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 up. So you actually have this level of liquidity. It's a low right here, right? So they're going to actually come in and sweep that into a key zone, which would be this fair value gap paired with this order block or this fair value gap, right? And so that is immediately where my eyes draw to for many, many reasons. First off, it was a big overlap of many fair value gaps. The 30-minute, the 15-minute, the 5 minutes, right? The 3 minutes, 1 minutes, all here. You have liquidity right here, actually, which we'll go over in a future video, guys. So be patient with the questions. Just watch the videos. As you can see, they sweep the liquidity, went into this fair value gap, and look, higher, right? And so this is very low time frame trading. But fair value gaps you can use on any singular time frame. You could do monthly, weekly, and I'll show you on Bitcoin on the monthly chart, the weekly chart levels that I've been posting on my Twitter recently, yesterday, showcasing how this truly works. Okay? If you work a job and you don't have time, guess what? You can do this on the monthly and weekly time levels, and you could have seen trades, and I'll show you trades that you could have taken, okay, off these levels, the way they trade, and it's incredible. Okay? So the methodology for a low time frame, I would say under an hour is a little bit different than higher time frame. So under an hour, what we're really doing is identifying where fair value gaps overlap. We're identifying where the other concepts I'm going to show to you guys in future videos overlap as well, and where there's liquidity that the market makers and exchanges want to stop out because they make money off fees, right? Listen, if you lose money, someone's making the money. Right? And the exchanges love liquidating people because they get fees. They collect the fees and they make money that way. All right? So you have to know that. And so they're going to push price to wherever there's liquidations and liquidity, right? Liquidation, liquidity, right? It's the same thing where money is, right? Because when you get liquidated, they take your money, right? And that's how the market moves. It moves in waves of liquidity on high time frame, low time frame. And that's what I'm going to be teaching in the next video. So there's going to be very short, low time frame. This is algorithmic liquidity. This is where algorithms would put their liquidity. So what happens is they come in and make this price right here efficient again, right? Because it was inefficient. Look, if we scroll like this so you don't see the right side of the chart, look, it's just straight up. Don't you see it? Straight up, straight up, straight up, straight up, straight up, right? As you can see here, it's zigzag, 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 right? The price is efficient in here. There's both sides of the market being traded, long side and short side, right? Here, it's just straight up, as you can see, straight up, straight up, straight up. So what is not being efficiently delivered? This is from 78,300 to 80,700. That's $2,500 on Bitcoin. That's a lot, right? And it was all inefficiently delivered, right? The algorithm, all of this was inefficiently delivered by the algorithm. So what do you expect? The algorithm is going to make it efficient again. Are they going to come back all the way down here? No, because if we're truly bullish and this is a low, we're not going to come and retrace the whole move. But what we're going to do is retrace a portion of it and make it efficient again, right? There's only buyers in here. Hence, look, there's gaps in here, 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 gaps in here. There's gaps everywhere, making this an inefficient price run. This was only buyers here. There's not sellers, hence why it was straight up candles. So what's going to happen is, first off, algorithms will take some profits here if they were buying, right? It's just simple, take profits. People are going to take profits like me. If I was long in here, I'm definitely taking profits because I know in the back of my head, hey, that was a very inefficient run on price. Very inefficient. What are these algorithms meant to do? They're meant to make price efficient, right? It wouldn't be fair if Bitcoin went from 60K to 100K without going down a little bit, right? That makes no sense. It has to be efficient. It has to be efficiently delivered. And you're going to hear me say efficient, inefficient millions of times, so get used to it. That's how these markets work. They work off liquidity and inefficiencies. So this was all inefficient. What are they going to do? They're going to bring the price back. Are they going to retrace this whole move? No. As I mentioned, that would be a sign of weakness. You would want to be shorting that. So they come in here and they deliver it higher. Anyways, let's do a short example. And by short example, I mean a short. Like you want it to go down, not a quick example is what I mean. Right? So for example, right here, we're just going to do the 1 minute because, as I mentioned, I'm not going to refine the time frames 5 million times. But as I was saying, this works on every single time frame. So if you're day trading, scalping like I do, taking 10 trades a day and, making whatever per trade, then what you want to see is low time frame. So for example, right here, if you guys can't see, right? We took liquidity right here. This was stops right here. We took it out. We went quickly lower. We didn't have any gaps here. We have a tiny one in here, but not any in here. We have a big one in here. And you're not trading just fair value gaps, guys. It's all about context. That's why after this video, please do not go trade immediately. You need this entire playlist of series of videos I'm going to do to fully grasp even a tenth of how to trade. All right? Don't go in and just like, oh, it's a fair value gap. Chris told me I'm a short and it's going to blow right through you. That's not how it works. No. There needs to be a narrative. Just like there's a narrative in meme coins, there needs to be a narrative when you're trading, right? So for example, they took liquidity right here, right? Which is good. We're going to go over that in the next video. They took liquidity, stops. People that were short got stopped out. And here as well. People that were short got stopped out. People that were short got stopped out. People that were short up here got stopped out. They took stops. Then guess what? Right? We had an inefficient price run higher. We're obviously taking liquidity, meaning people lost the money. If you're shorting, you got stopped out here if you put your stops there. And so that was the entire premise of this. Exchanges make money. Market makers shake out the shorts and then they short it, right? And there's another concept I'm going to go over, which is inversion fair value gap. So what's an inversion? It's the exact opposite of a fair value gap. It's just on the opposite side. So right here, if you guys can see, you have a gap in there, right, guys? You have a gap. If you guys can see that, right? High, big candle through, no wicks. You have the low here. That's your gap. Well, guess what? Fair value gaps and inversion are the same thing. Inversion are inverse. So you can use that likewise, and I'll cover in a future video on trading as well. And I honestly, inversion fair value gaps are a little bit better than fair value gaps, in my honest opinion. All right. But as you can see here, we have a big pass through. Look, fair value gap in here. Right? Fair value gap in here. Another one formed right in here. Right? And let's drag this one. All right? And there's a beautiful example right there for you. I didn't even make it up. Look at that. Inversion, right? As I said, inversions work the best. So you have a fair value gap in here. You're not going to get tapped into this one because it's too high up, right? If we're bearish and they want to short it, why would they do this, right? Think about it. If we're bearish in here, and we have stops, they're going to take stops out. Why would they do this, form a fair value gap and go here? No. They're going to be very, very quick with it, and they're going to move it very fast. They're going to drop it. Big inefficiency in here, right? But guess what? You don't want to efficiently deliver this because it's super big, and this was a straight up move. So if this is straight up, most likely, if we're delivering price efficiently, we're going to go straight down. We're not going to come up and down, up and down, up and down, right? So as you can see here, big passes through to the downside. Quick rebalance. See how it came into the fair value gap right here? We're going to delete this one. See how it came into this one? We're going to make this another color so it's easier for you guys. And I understand I'm going at 1,000,000 miles an hour. Just keep rewatching the video, okay, guys? Just rewatch it and you'll learn. So there's the fair value gap. We come in here, rebalance, big candle to the downside, and we keep going. And look, this is another, look, inversion fair value gap right in here, right? So it comes in, goes below, comes back in, shows resistance, comes back down, all right? So those are inversion. This green one's an inversion, this green one's an inversion. But this is how fair value gaps work. It's price that's inefficiently delivered, right? And it's going to show you how to trade. So likewise here, you have fair value up in here, fair value up in here. See, we came in here, shorted. Came in here, shorted, right? And these are not the end all be all. As I say, there has to be a narrative, a narrative, a narrative, a narrative, a narrative. Okay? So likewise, I briefly mentioned inversion fair value gaps. So it's a fair value gap that gets turned into an inverse, right? So as you can see here, as I mentioned, there is a fair value gap right there. This was a bullish fair value gap. Well, guess what? It got inversed, right? We went below it. So look, inversion fair value gaps usually get traded to and used for future moves. So as you can see here, we shorted. We didn't take this liquidity. Why? Well, I'm going to tell you in future videos, but it's to induce or trick people into longing. Oh, we're rejecting this low. That means we're going to go higher. We're rejecting it. Well, no, they're just faking you into longing. So you're going to long here. They're going to be like, oh, they're going to give you a taste of victory. They're going to pump it. You're going to be like, oh, I'm making money. And then they start nuking and they're like, oh no, I was up money. Now I'm back to entry. Let me buy more. I'm going to put my stop in here. We're good. It's supported. It was supported right here. I'm going to buy here. I'm going to double down. All right. We're strong. We're going to go higher. And then boom, they nuke it and you're out of money. You're done. You lose your money. You lose your position. You get liquidated. They make money off your fees. And they're like, oh no, I was right. Or I was wrong. Now I need a short. And you short here. And guess what? Boom. Start pumping it. Right? That's liquidity. And I'm going to go over that. It's how the market moves. And so what happens is they pump it. And look, where do they pump it to? First off, they pumped it to this little order block. But as I say, order blocks are not that good. They're not the best. And come in here, inversion fair value gap, right? This was a bullish fair value gap. Come into here. Look at that. What did I say before in previous videos? Comment down what I'm going to say here. Wicks do the damage. Bodies tell the story. Look what happened here. The wick did the damage. Bodies told the story. See how the wick went all the way here? But look where the 1 minute candle closed. At the bottom. At the very lows of the inversion fair value gap. What does that mean? Price is showing you. The body's showing you what they want to do. At one point, price was all the way up here. It was a green candle all the way up here, and they nuked it back down and closed it right there. All right, it opened here, went up here, came back down, closed it. So what is that showing you? A rejection in price. Right, so that's giving you another hint. Because why could you shorten here? Well, first off, if you guys see that, look, there's liquidity right there. See this? People that are short right in here are putting their stop here. They're putting their stops here, right? Relative equal highs. I'm going to talk about the liquidity video. Relative equal highs, right? People are going to short here, okay? And all that stuff, they're going to keep putting their stops in here. And guess what? They're going to induce the liquidity, take all the liquidity, take the money. And guess what? As we mentioned before, this was a big inefficiency. Well, now they're going to efficiently deliver it. And what do? They efficiently delivered the top portion of this fair value gap. As you can see, they fully filled it up. And guess what? They come into the inversion, even a tinier price of the algorithm, and they nuke it. So I would really love to see a convincing argument for people in the comments as to why the markets aren't run on an algorithm, because I just showed you how painstakingly obvious it is. This is all algorithmic. All right. People are going to say, oh, it's not algorithm, it's buyers and sellers. Yes. So you're telling me millions of people across the world perfectly were buying and selling, that it comes into this rectangle perfectly, stops at the very bottom of the candle. See how it opened here, closed here at the very bottom, opened here, came up here, nuked, and all was respecting these levels. You're telling me millions of people were buying and selling Bitcoin perfectly to these levels? Please, come on, guys. Let's not be stupid here. This is all algorithmic, all right? I learned it from ICT. I know a lot of you hate him. Oh, he's a scammer. He sold a course. Well, you guys watch Red and Ghosty and all these guys, and they're scammers too. What's the difference? All right? At least this guy made me a lot of money, guys. I learned ICT and was teaching myself through his videos for a year and a half, and he made me money. If it wasn't for him, I would be working a job and being broke right now, or working somewhere in Manhattan in a bank doing investment banking or trading for a hedge fund. Sure, would I be making good money? Yes, but that's because I went to a good school, not because, anything else. All right? So without him, I would be in a corporate 9 to 5 right now, or a 9 to 10 if you know anything about investment banking, hating my life, making, a tenth of what I make weekly or whatever, right? So, guys, this is all algorithmic. I do not care what you have to say about the guy, if he's a horrible human being. He taught me how to trade. I'm showing you examples here, exactly how these levels are working. This is incredible how these levels work, all right? And you can't say this stuff doesn't work because you're going to say, oh, why didn't this fair value gap work? Well, it did here. But why didn't this? Because you have to pile all the concepts together. I'm emphasizing, do not trade until you watch all of the perp videos I do. There's going to be probably like 6, 7, 8, 10. I don't know exactly. But watch a decent amount of them first before you trade. Because you're going to just blindly buy a fair value gap and do random stuff. And then you're going to complain, oh, this is fake. I lost my money. No, you're just impatient and you suck. All right? I'm going to tell you how it is. No one's going to tell you on YouTube how it is. You suck and you're impatient, and that's why you can't make money. And that's why you're broke. Be patient. Watch all the videos. If you don't want to wait for mine, go watch his ICT videos. He has 5 million videos. You're going to watch them for 3 months before you know what you're doing. And that's why I'm making shorter, more simplified videos. But go do them. Go watch them. All right? That's what you got to do. You're not going to learn how to trade overnight. It took me a year, year and a half, almost 2 years to make any money trading and to know what I'm doing. All right? For 2 years straight, I was pretty much losing money on paper trading or actual money. Actual money. I was losing money trading, right? Futures. Because I was learning. I had to learn. Same with you. You have to learn. You can't hop in, buy, click a couple buttons, buy, sell. Oh, I made money. Sure, it might work a couple times, but in the end, you're going to lose all of it. All right? So this was low time frame fair value gaps. Now I'm going to show you high time frame. I'm going to use TradingView, which is just a charting software. No, you do not need it. I'm just going to show you. You could literally do the charting here as well on Axiom, right? You could do the charting on here in Axiom. I just love TradingView. It's more simplified for charting. I'm just going to chart the levels for you. But anyways, if you want to trade perps, as I said in the intro to perps video, use Hyperliquid. Hyperliquid is the best one. It's the cheapest. It has the best airdrop. You should not be trading perps on any other platform. I'm telling you right now, no other platform should you be giving your money to and trading on. They're trusted by millions. There's millions of people having lots of money on there, myself included. There's a great airdrop potential for you to farm, and the fees are the cheapest. So even if you don't care about airdrop or any of that, they're the cheapest fees. And if you're in the US, all you need is a VPN. You could also trade perps on Axiom, but right here in the bottom right-hand corner where I'm showing you with my mouse, powered by Hyperliquid. It's the same stuff. The only difference is Axiom's going to be a little bit more expensive, and you don't get the airdrop, as far as I know. All right, so that's the benefit of Hyperliquid. This is the only one you should be trading on. Anyways, let's get into high time frame fair value gaps. I'm going to do a monthly fair value gap level example on Bitcoin right here, and how you could potentially trade this. So guys, now we're on the monthly time frame for Bitcoin on TradingView. This is simply a charting software, so you do not need to get this. You could do this directly on Hyperliquid. I'm just doing it because it's easier for me. I've traded futures on this platform or service, you could say, for years. So right here, if you guys can see, we have a monthly fair value gap, right? Look at this big pass through. We have a wick in here, big candle coming here, wick in there, right? So we have a huge monthly fair value gap. And what I'm going to show you in this segment is how to do high time frame for value gaps and how to find very, very key levels with these concepts of fair value gaps. All right. So here, I'm only going to do the monthly example, but you can do this for the weekly and daily. And I actually did post on my Twitter the weekly and monthly levels. So once you do them, you can go back to my Twitter, scroll down a little bit, and I posted the levels, and you could double check if yours are the same as mine. All right. So here we have the monthly level. And you're looking at this and like, dang, Chris, I mean, yeah, it's a big rectangle. It's from 73,000 to 91,000. What the heck am I going to do with that? And you're like, absolutely right. Well, guess what you can do actually? You can actually segment this rectangle into quartiles. You could do the 0, right, which would be this level right here. Let me give it to you, right? You could do the 0. You can do the 25%, which we're going to find. This 50% mark is delineated right here by this line, but we're going to do it anyways. Then you're going to do a 75% mark, and then look, this is the top, right? That wick and these wicks are the bottom and top. So you already have 2 lines. You just need to do the 25%, the 50%, and the 75%. And then you're done, right? So here's what we're going to do. We're going to delete this rectangle, and we're going to go over to here, to fib retracement. And we're going to click here, and that's going to give you the levels right here. As you can see, 0.75, 0.5, 0.25, right? These are key levels. So what you're going to do is, on Hyperliquid, you're going to go into the fib retracement and fix your settings. So you're going to do 0, any color you want, 1, any color you want, and you could just do them in order. I just have them messed up from other stuff. As you can see, I was doing other stuff. But 0.25, 0.5, 0.75, that's all you're going to do. And you're going to drag it from this low to this high on any time frame. And there you go. These are your key levels. You have the 1 or 0. You can flip it however you want. The numbers do not matter, these ones, right? You have 73K, 78K, 82K, 86K, 91K. And guess what, right? We're going to turn off the magnet, and we're going to actually draw lines on these levels. So it's nice and easy for us, and it's not confusing. So right here, 86,886, we're going to draw a line. We're going to make it any color we choose. We're going to do blue. I love blue. Text, we're going to do top quartile monthly fair value gap, right? FVG. And coordinates, we're just going to type in what it says in here. So what are the coordinates they say? 86,886. 86,886. 86,886. And beautiful. There you go. Now we need a 50% mark at 82,458. Right? 82,458. All right. Now we have I call it the consequent encroachment, which means the 50% mark, but you can just write 50%, right? Monthly fair value gap. That's all you got to do. Okay. And then we need the 75%, which is 78,029, and we could delete it. 78,029. 78,029, guys. And here we are. I'm doing it with you. You could do it with me in live time. Okay. And you don't need to keep typing monthly. I'm just doing it so you guys know what's going on. And this is the top of this wick or the bottom of the monthly, and this is the bottom of this wick or the top of the monthly, right? And this is the top 25%, the 50%, the 75%, and then the last. And so what happens is you could go into a low time frame, and guess what, guys? You could actually trade these levels. So let's go into the 15-minute, and look at this. Voila. Right? Look. You could be trading these levels. So for example, look right here. We were trading, came into this level. You could have been identifying on the 15-minute, like, oh, there's a level here. Let's go into the 1 minute. I don't believe it's going to let me scroll back this much. Okay, it does. All right. So here, you can see, oh, look, level. All right, we tap in. Guess what? There's liquidity in here. Look, fair value gap. Fair value gap, guys. You see that? We have this level. Boom, we pump. Fair value gap, yes. Boom, boom. Come into here. Liquidity, fair value gap. Send it higher off this level. And guess what? Yeah, I mean, you don't get a crazy move, but look. That's 92,500 from 91,300, right? That's a $1,200 move with no drawdown. You didn't take a single drawdown, which means loss here. You buy here, the most you're down is $150 on Bitcoin. If you had $100,000 in, you would be down 150 bucks, right? You guys aren't trading with that much, so you guys would be down nothing. And it pumps on leverage, and boom, you're in and out. On 50x leverage, you would have made 80% on your investment right here. Boom, into here. Right? And then guess what happens? Oh, Chris, I bought it here, but it nuked. Well, yeah, you have to use context clues, just like I said in my bounce videos. It needs to create a market structure shift off of the level. You can't just blindly buy it. Here, we start nuking. Guess what? We have a fair value gap in here. Into this level, we're rejecting it. You want to be shorting. What happens? We short. All right. Well, what do we know about the markets? The markets want to move level to level, liquidity to liquidity, inefficiency to inefficiency. And you're like, Chris, these are just lines. Yes, but scroll back out. These are the lines of the monthly fair value gap. What's a fair value gap? We discussed it. It's inefficiency. It's inefficient price. Do you not see how inefficient this was? We went just straight up in November because of Trump. We went from 70K roughly to 95. Very inefficient. It was just straight up price action. You can see it here how it works. Look, see how inefficient this was? Boom, we pumped from 42,000, 43,000 to 62K right here. It was very inefficient. Guess what happens in the next months? We chop, 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 chop. Oh, look at that. We come into the levels right here. Right? This fair value gap, you could have done the 4 levels and you see how it works. And guess what? We pump. It was simply just coming back down to restabilize the inefficiencies here. No, there's no bear market. No, there's no issues. It was just simply to make an inefficient delivery of price efficient again. That's all it was. Nothing wrong about it. All right. So these are the levels. You come into here and now you have key levels, right? So you could have been shorting. So went to this key level. Guess what? It bounced here. You could have taken a scalp long, right? You could have targeted this inefficiency, this liquidity in here. You have multiple areas. Guess what? Now it redelivers from 82K all the way back to 87K. Guess what? Wow. It came into the top 25%, top quartile of the monthly FVG, fair value gap, and efficiency. Guess what? It rejects. Oh, back down. Right? And honestly, you could even do the midpoints of these. So you could do the 50% of these if you really want to get crazy with it. Right? So you could do the 50% of the 91 to 86 and do the 50%. You could do, something like this, right? Into here. Oh, look at that. Right? Rejecting the 50% of these. So you could get even more crazy with it. Right? If you want a lot of lines and you're okay with it, you could do the 50% of these, just the 50% of these levels, right? And then 50% again, and 50% again of here, here, here. And that gives you more levels to play off of. So you can be shorting here, right? This is actually a weekly level right in here that I guess I could show you in a second. We'll do the weekly, but as you can see, you could be buying here, selling here, right? Okay, we rejected, we closed below. Well, what does that mean? Wicks do the damage, bodies tell the story. See, look, wicks do the damage, it went below, but where the body is? Here. Boom. Long. Here, bodies close below. What do you want to be doing? Is rejecting. You want to be shorting, shorting, shorting. We came into this level pretty much, right? Literally, we were $200 off, and boom, we pump, right? And so these are how monthly, weekly, daily fair value gaps work. You get these levels going, and you could be trading. If you're at a job 9 to 5 or 9 to 9, you're working hard, and you can't be at the computer all day. Well, guess what? You could be looking where we're at with these levels and like, maybe, I put a short limit here with a stop here, right? Stop at 88,300, short limit at 86,900 or 850, whatever. And let's see what happens while I'm at work. And look, they tapped you in at 545. That's all you guys could do. You could short here when you're at work, come back down into here, you come back from work, whatever. Oh, I played the level, you shorted, you made money. Wonderful. That's really how simple trading can be. All of you just overcomplicate it, right? All of you overcomplicate. And so this is why I haven't been posting many videos, simply because I'm busy, man. I'm trading. I'm making money. As you guys saw on the low time frames, you could do it. You could do it on the high time frames as well with more money. I'm busy making money. That's why I'm not making content as much. So I apologize. I'm going to try and be more efficient with my time and more effective with my time and try and make more videos more often for you guys. So I apologize about that. But that's how these levels work, man. This is the monthly. You could do the weekly as well. And I'm telling you, trade perps on Hyperliquid, man. Best platform ever. But let's go. Let's do the weekly, all right? Let's do the weekly really, really quick because I got to go. But here's the weekly, right? Let's get the magnet going so we're precise with our levels. Weekly right here. Boom. All right. So let's just do the fib. I'm not going to draw out the line. Let's just do the fib real quick. So we know these are the levels. Let's go to the 15 minute. So we know these are the levels. So anything with the 0, 0.25, 0.5, 0.75, and 1 is the weekly level. Well, guess what? Let's see what happened. Well, all right, look, the very top. This is the 0, right? So this is the weekly fair value gap. Look, the very top. Oh, we tap it. We tap it. We tap it. And guess what happens? We reject. Where are we coming here? Look. Yes, we have the monthly 50% here, but guess what? This is another line off the 75% of the weekly. Guess what? You could have been scalping along here and you're like, oh, how? But the wick went here. Yeah. If you didn't catch this, guess what? It pumps and it comes back. Where does it come back to? In here. And we'll go into low time frame and I'll show you how. And so let's get to it. So right here, I'm going to draw a big circle so we know exactly what we're looking at. We're looking at right here in this price on Wednesday. All right. Let's go to Wednesday. And look what happens. Magic. Magic, guys. This is all magic. Look at that. Right? We first bounce off this 75% of the weekly fair value gap. What happens? We bounce. Okay, nothing really happens. We're still weak. We nuke. All right, this is my favorite setup ever. This is the best setup ever. When we just nuke completely into a level. If you don't buy this, that's fine. Look, it came into the 50% monthly. You could have been buying this, making money. Okay, you didn't. Guess what? It pumps. Blah, blah, blah. And guess what? Look where it comes back to. This level right here. The 75% of the weekly fair value gap, right? And it's this level where we previously found support. Look at that. Wow, Chris. Trading is so easy. Yes, it is if you don't gamble and you know what you're doing. It's that simple, guys. It really is. And I actually took this trade. You can ask Jay, my mod in Discord, because I bought it here and he was like, hey, Chris, I'm going to short at 84,180. And I said, do not short. You're going to lose money. And then 10 minutes later, when I took profit here, he was like, oh, Chris, you were right. Thank you. Yeah, man, I know what I'm doing, guys. Learn. Take the time and learn. You could go and DM Jay. He's a mod in my Discord. DM him. Hey, is that true? Yes. You could scroll up in the Perps chat in the free Discord. Scroll up all the way to Wednesday at this time. Go to Wednesday, 4:45, 4:46 at that time. Scroll and you'll see Jay saying, oh, I got a short limit at 84,100. And someone in the Discord said, oh, PvP. And I was like, close that short. Close that short. Cancel it. Because you're going to lose. All right. And exactly what happened. Guys, it bounced off the level and it pumped. Almost $2,000. It pumped instantly straight up. And I took profit because it took the liquidity here into this order block, took this liquidity off this level. And I made profit and I saved my mods money. All right, guys. So please, if you devote rigorous time and discipline into this, you can make a living off of this like I have. All right. I'm not like these other YouTubers who make a living off courses and Discords and referral links. Yes, I do have referral links, guys. Yes, we know that. I make a little bit of money off that. That's your way of supporting me for giving you all this knowledge that other people charge for, right? Because I can make a course or a Discord, charge $500 a month for all this info, and make $200,000, $300,000, $400,000, $500,000 into my pocket every month, right? Instead, I don't go down that route. I share what I know, what I've learned throughout the years from other people, make it simple for you guys. And all I ask is for you to support me through links. If you even want to do that. If you don't want to do that, don't do that either, right? The only way I want to make money off my community, right, even though that sounds bad, is through ways that are free to you, right? And the only ways that is you guys supporting me, just subscribing and also using my links. And that's all I ask for. Nothing else. I don't want anything in return from you guys. I will always be free, right? I always want to share content and education and help you guys out. But yeah, that's a prime example right there. We bounce off, we pump. So the premise remains the same. These levels work in context. And so I really, 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 really hope you guys watch this video 50 million times over, because you're not going to understand all of it the first run through. And I've specified everything you need to know in this video. So please do not ask me questions, because this video most definitely answered them. And if it's about any of the other concepts, order blocks, liquidity, inversion, breaker blocks, whatever, discount premium, I'm going to do future videos on that. So hold off your questions, please. All right. But anyways, please guys, take the time, devote a little bit of your life to this, and you could change your life, man. I changed my life in 3 years. If you want to start counting from the very beginning where I was losing money and learning, in 3 years, man, my entire life changed. 3 years in the grand scheme of things is not a lot, right? Would you rather work an office job or construction, right? Like my dad works construction. It's hard. Like I worked when I was 13, 14, 15, 16 with my dad during the summers. It's tough, man. That shit sucks. It's horrible, man. All right. So do you guys want to do that for the rest of your life, or you don't, right? 3 years is not a lot of time. It goes by fast. I wish I could go 3 years back and relive the 19, 20, 21, right? But I can't. I'm 22 now. But that's life. But guys, devote some time. I'm telling you, you could change your life. You could change your family's life. Whoever's life you want to change, yours, most importantly, of course, easily, if you put in the work. It's really that easy. Like, let's go to the hourly. See how these levels are bouncing? See, look, wicks do the damage, bodies tell the story. See how it's holding up here? You get long it. Oh, into this level. Oh, short it. Wicks here. Oh, holds here. Short here. Like, guys, it's that easy. Look at how these levels are getting treated. Look at the bodies. Bodies. All right, it wicked here, but guess what? Bodies. You get long into here. Right, guys, it's that easy. It's really that easy, man. Don't go buy courses, Discords and stuff and lose your hard-earned money for this stuff, man. ICT gave it for free. I'm giving it for free, right? It's not my stuff. This is not my stuff, and I don't claim it to be my stuff. I'm just giving it to you in a simplified manner because he loves to yap. So do I. As you guys can see, I love to talk too. I love hearing myself as well. You know me. I love to talk. But I'm trying to give it to you very, very simplified, very easy to understand without too many rambles. I'm going to ramble once in a while too. But you guys can skip through those parts. But anyways, guys, please, 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 I'm going to encourage you once again, take your time learning. It took me 2.5 years roughly to learn all this stuff. You are not going to know it in a week. All right. You might start getting the hang of it in a month or two, but then that's when the psychology comes in. The reason it took me 2.5 years is not because the concepts are hard or stuff. It's because I had a very tough time psychologically and mentally. That's why I'm very strong psychologically in trading now, is because I had 2 years of just being stupid psychologically. I was up money, I got greedy, I lost it all. I lost money, I doubled down, lost more. I was just being stupid. Now I refined my mental, and so now this game's super easy, right? So you could be a phenomenal trader better than me in 3 months. You can, right? Because it's all your mental and your concepts. So anyways, I really hope you guys took this video to heart, learned something. If you do need a trading platform, I'm telling you, lock in with Hyperliquid, man. The airdrop is going to be fire. I'm telling you, some of my friends made $500,000 just off the airdrop when they were farming it, normally trading with a couple $100,000. Of course, you're not going to make $500,000 unless you're trading with a couple $100,000. But listen, it's free money regardless. Even if you trade with like a couple $1,000, you might make a couple $1,000 at the end of the year anyways. So it's just free money. So lock in with Hyperliquid. Link is in the bio. But yeah, man, lock into perps, man. Like, when the market takes a downturn, guess what? Who cares? You can make money shorting, man. Don't hold your meme coins to zero when you could short them to zero and make money. So anyways, guys, I really hope you appreciate this video. Hopefully you guys learned something. I appreciate you guys watching and supporting as usual. Anyways, guys, I love you all. Peace to you all. May your trades, work out in your favor. May everything be good. Hope you guys are having a good day. So let's keep it going. Let's keep it grooving. Gonna keep pumping out these perp videos. Hopefully you guys are learning stuff. So anyways, peace. Love you all. Talk to you soon. Bye-bye.